Welcome back to another futures trading recap for Wednesday, December 4, 2024. The time is currently 7:35 a.m. Eastern as I'm making this pre-market part of today's video. I'm Sam and I trade the E-mini futures. This part of the daily recap video is where I show the levels of potential support and resistance in the SPY that I've identified for the day. We use these levels in the SPY to inform and help manage intraday trades in the E-mini futures. So far in the after hours session, several markets have climbed even higher. At a couple hours before the opening bell, the SPY is at 605.74. It seems they are poised to gap up at the open. Between now and the opening bell, there are some employment numbers being released, and then at 9:45 a.m. Eastern, there is a PMI data release. These news items may be significant today, considering that so far this week, the market has been relatively slow and flat. Now they seem to be moving a little. Also, later this afternoon, I think at 1:45, there is a speech by Jerome Powell, for whatever that's worth. If the SPY gets above 605.66, you see the level there, and we start seeing hourly closes above that level, they could be targeting those higher resistance areas. If the bulls fail to do that and price falls today, we have levels below current price that could act as support. As always, how these levels are traded are contingent on current market behavior at the time price approaches each level. After the closing bell, we'll revisit this same chart to talk about any trades taken during the day based on these levels and look at how the day's profit or loss stacks up in the bigger picture and dig into the tracking log. So this way you can see for yourself how effective this futures trading approach is. Catch you on the other side. Now that the regular session has closed for the day, it's obvious now that 605.66 was the important level for the day, as I surmised this morning. If price could get above that level and close some hourly candles above it, the likely destination, at least for today, was the upper levels. They came up short of 608.12, but going long at a certain time at 605.66 was the ticket, and that's what you would have done if you were playing by the rules. So let's examine the trade of the day a little closer. Where was price at the 15-minute mark after the opening bell? The close of the 9:45 a.m. candle was just a few pennies above this level. So if you're trading these levels per the rules, you would have bought at the market however many ES contracts you're able to trade, looking for a minimum of 4 S&P points, and that's what was given to you in a few minutes. That was the trade. To get better odds that price would continue higher later in the day, you'd still want to have seen more hourly closes above that level. So while they did come back and play around with this 605.66 level a few more times, the bulls did establish a foothold after a few hours. They tried a little fake out here right before that 1:45 p.m. speech by the Fed Chair Jerome Powell, but they kind of used that as an opportunity to bounce off that area and to go to new highs today. Were any of these other hits at 605.66 valid for additional long trades? Not the way I like to trade these levels, but you're welcome to do what you want. Once there's a good base hit profit at a level, I'm not trading it again, at least not on the same side. I'm kind of curious why they stalled out at 606.50, right where I'm hovering. They hit this level several times. It wasn't on my radar this morning, but it could have provided an opportunity for a short trade had it been on the board this morning. Anybody out there have any theories of why 606.50 or so was resistance? Feel free to chime in. I must have missed something there that should have been obvious in my pre-market analysis, but I'm not sure. Anyway, one official trade for the day. I took a trade today. It wasn't exactly orthodox, but I don't mind showing it to you. I knew I only had a couple hours to make something happen. I had other plans starting around 11 a.m., so I actually went short right after the opening bell. Yes, I know this isn't according to the rules. You never see me do this, but I had some reasons to believe that price would get pushed down at least earlier in the morning before they would rally, if they would rally. They'll usually do like a fake out kind of thing before they get on the side that they want to be on for the rest of the day, which for today obviously was bullish. So you see the time, it's right after the opening bell, and I went short with 2 contracts. And when they got near my fumble threshold, that's an area that if I saw certain closes above, I would have reversed the position. But I added 2 more contracts. Initially, I thought I could just get a quick base hit and that would be it for the day. But once I added to the position, I kind of became more committed to what I was doing. I managed to pull a few points, but it just took longer than I expected. I was out of the trade before 10:30, and that was good because I had to pack up. So I'll just scrub ahead here and show you. Went short again. So now I'm short 4 total. Really, I could have just took the whole thing off, but I took 2 contracts off down there. There you go. And put a trailer on the remaining 2, and it got stopped out before it really came down much farther. So let it go for a little longer. Right about 10:30 or so, I stopped this recording, and that's pretty much it for me. So that was my unorthodox trade, going against the rules a little, but no complaints about the outcome. So do we even need to look at the daily chart and other larger time frames, like the 4-hour, for example, 3-hour, and so forth? I don't know. There's really nothing to tell. They're just pushing higher. There's still no signals, at least on the SPY chart, that I can see. There is a destination higher, as I've been saying, and I have a couple trend lines that are converging higher up. They could become relevant soon, even this week. But in any case, I'm going to focus on levels that should have a likelihood of being hit during the day, and that's where we take our base hit scalp trades. And as you know, they work pretty well. In fact, we'll look at the tracking log right now and show you. As always, we start with the playing by the rules log. You can see the one level with a one base hit of 4 points and all the profit potentials based on number of ES contracts traded at each level. And you can peruse the other metrics on this log. And the Sam's Trades log is the same level on the short side, just a few points, almost $750 with that 4 contract short position. So that does it for today. I appreciate you following along. I'll be back tomorrow with new levels to trade. Maybe the SPY is getting close to their final destination on the upside. Could be this week or next, perhaps. I'm looking for clues everywhere. Thanks again. Talk to you in the next recap video.